Hello, everyone. Welcome. This is Mindy with Econologics Financial Advisors, and I am your host for today's webinar event. Today, we are Ask the Advisor series. This is going to be a panel discussion. So let me pull these up here for you. All right. So today we're going to be talking about and answering questions about your current economic stress. So first, I just want to thank everyone for giving us questions in advance. We solicited feedback from our clients and from a lot of the listeners that have followed us over the years. And we just really wanted to know, what questions do you have? What are you thinking about? What can we help answer in order to help get through this economic time? So thanks to everyone for doing that. We were able to select quite a few questions. So we have a very packed webinar event for you, full of questions and wonderful answers from our panel. So let's get started. All right, so your panel of advisors today is our very own Eric Miller, co-owner of Econologics Financial Advisors. We have our accountant to the owners of Econologics, Joseph Rosamilia, on. He is going to be answering the bulk of the questions, actually, since most of them center around the government funding and taxes. And then we also have Eric Gersh, our senior financial advisor here at Econologics Financial Advisors. Okay, guys, so are you guys ready?
Ready, let's go.
All right, we're going to get started. Okay, so first I just want to cover a few little disclosures. Econologics Financial Advisors is a federally registered investment advisory firm. We are not an accounting firm. So we want you to always look to a qualified tax professional for advice and information on taxes. And so anything that we answer here, although we have a wonderful accountant here who is licensed and trained and been in the business for years, this information is for you to utilize and go back to your accountant, or you're welcome to give Joseph a call as well. So we'll go over that a little bit long as we get through the presentation. Okay, so let's get started. So the topics we're going to cover today are questions about government relief loans and tax repercussions. We're also going to talk about how to plan for financial recovery. We're going to also answer some questions on how to handle debts. And then some general financial planning questions during this crisis. So what we encourage you to do is use the chat function of this webinar program. So if you look over to the right, you'll see that you have the opportunity to chat with us. I'll be watching the chat. I'll also be introducing the questions and fielding some of these questions as we go. So let's go ahead and get started. All right, first question. This entire section is going to be primarily about the government relief programs and taxes. So the first area. So if you have additional questions in the chat, if it can be just about the government relief programs, that would be great. And as we move into the other categories, we'll field those questions. That'll just help me to organize these better. Okay, so the first question, what's out there and why? And under what circumstances would it be beneficial to a practice owner? So Joe or Eric Gersh, I'm going to hand that one over to you to start.
Well, I guess the two big programs that are out there are the loan programs, the PPP program, which is the Paycheck Protection Program, and that's what everybody's been applying for. The other one was the EIDL, which is the Economic Injury Disaster Loan. So those are the two big programs that are out there, and there's also a lot of tax changes that were made, some of which are precluded by obtaining those two loans. There's an employee retention tax credit and also a deferral of payroll taxes. Mm-hmm. But if you get a PPP loan, you're sort of precluded from using those other things. So I guess the main concentration now is, and most people are probably aware of it or have already applied, is on the PPP loan, getting it, and then how do you go about getting forgiveness of it?
Okay, awesome. Yeah, I think most of our questions that we're going to cover today are about the PPP and about the EIDL. Okay, good. So let's keep moving. All right. So the next question is, what will the long-term effects for my business and me personally be? The relief programs have to be paid by someone. So I think, Mr. Miller, why don't you answer that question?
Well, I mean, look, I don't think anybody knows what the long-term effects are going to be from this at this point in time. As I've said before in previous webinars, right now, we have to just kind of look at this in 1 or 2 week increments and really just plan that way and do whatever you have to do to make sure that you are keeping your business there and alive and producing. And, from our standpoint, who knows what the financial ramifications are going to be long term. Don't worry about that. Promote and produce right now. Those are the 2 actions that most of you should be focusing on at this point in time. And we'll worry about the rest of it as it plays out. That'd be my short answer to that.
I like it. Okay, good. So next question. What can the money be used for on funds deposited from HHS, which is the Health and Human Services? So this has to do with Medicare providers. Is that right, Joe?
Yeah. People started getting deposits in their checking account on Friday. We started getting texts and calls from clients that deposits were showing up. I don't think anybody was fully aware of it, that it was happening. So, we took a look at it, and, it's based on, if you're receiving Medicare receipts from HHS, and it seems like these are payments, not loans, and they don't have to be repaid. So, I think you could pretty much use the funds for anything that you wanted to, any general business purpose. I mean, you'd want to segregate them and make sure they're properly identified so they don't get misclassified as a, regular income or receipt. So, but it doesn't seem like there's anything precluding you from using them for, just regular operating expenses.
Okay, great. Thank you. All right. The next question is a 2-part question. What accounting is needed for these programs? I'm assuming it means all the different programs once you receive the funds. And should we have a separate bank account for these funds? Joe, you want to take that one?
Yeah, I mean, just the accounting wise, again, you'd want to make sure you have things segregated, make sure your accountant could identify them, that they don't get mixed in with your regular receipts, that if you get a PPP or an EIDL, money's coming into your checking account, you segregate it. I would probably open up a separate general ledger account, and if you're using QuickBooks and just to identify it and make sure your accountant's aware of it.
Okay, great.
As far as needing a separate bank account, some lawyers recommend that. I think from a practical purpose, it gets kind of hard because, on the PPP program, you're supposed to be using most of the funds for payroll, and a lot of people are on payroll services where the funds are getting, directly pulled out of their checking account. And to set up an account and switch everything over, I think is probably just going to add to more confusion and heartache for people. So I would probably, dollars are fungible, and I probably wouldn't open up a separate account.
Okay, thanks. Hey, we have a question on the chat line. How do we get these HHS payments? Do any of you know the answer to that?
I don't know the answer to that.
It's my belief that they were just sent out to those who qualify. Nobody that I've talked to has applied for them or anything like that. They just received the money.
Yeah, I think it's just based on your, 2000. I think they took like an average of your 2019, reimbursements for Medicare, and just checks started showing up, deposits started showing up based on that.
Okay, awesome. Next question. I've received the PPP funding. Now what? How can or should I spend the money? Gersh, you want to take that one?
Sure. Yes. So once you receive the money, in order to get complete forgiveness, you have to use 75% of it on payroll costs. Now, payroll costs is not just salaries and wages. It can be retirement plan matches. There's health insurance provision in there. So you want to use 75% on your payroll. And then the other 25% can be used to pay utilities and rent/interest on your mortgage.
Okay, great. Joe, anything to add to that?
No, I mean, the only thing to keep in mind is once you get that money, it starts that 8-week tolling period. So you have those 8 weeks to, start spending that money down. It's going to be a tough decision for people to make as far as, who do you bring back and bringing back people, and, does it make sense to spend it all on the 75%? So everybody's going to have their own decision on, what's best for their business on how to spend that money. Because, one thing in the end is that you know, the worst case scenario that happens is, you know, you don't spend it all and you have a 1% loan for 2 years. So, you know, everybody's going to have to evaluate the situation that they're in.
Got it. There's a quick comment on the chat about the 25% being used for non-payroll items for the PPP. Any comments on that?
You know, it's rent, utilities, which are, you know, gas, electric, water. They have telephone, internet charges. It says interest on mortgage obligations. Some people are saying that it's really more than mortgage obligations. It's interest on any type of loan, I guess, where there's either a mortgage or maybe like on property and equipment where there's UCC filings on it. May also qualify for that. As far as the rent goes, it says rent under a lease. That may, you know, make some people start to, especially if you own your own building, you may want to go out and find your lease. Make sure you have a lease because the banks may want it. So, you know, a lot of times people are kind of like lax on that. You know, they're renting the building to themselves. They don't have a lease, but your bank may say, hey, we want the lease. So you better find the lease and make sure that lease was in existence before February 15th.
Good advice.
That's the date.
Awesome. Okay, good. Next question, another two-parter here. If I do not bring back all my staff, is the loan cost just proportionally increased? The example they gave was bringing back 9 out of 10 employees, so the loan cost is 10% of the total. There's no penalty. Joe, you want to take that one?
Yeah, well, the whole loan forgiveness, you know, reading the law, to me, it's kind of an enigma. It's a little bit hard to follow. I mean, one of the first things is they're looking at your full-time equivalents, and they're comparing it really to 2 periods. Again, once you get the loan, starts that 8-week tolling period. So you need to calculate your full-time equivalents during those 8 weeks. And then you really have 2 look-back periods to look at. You could look at your full-time equivalents from February 15, 2019 through June 30th, 2019, or you could look at your full-time equivalents from January 1st, 2020 through February 29, 2020. And obviously, you want to pick the period that has the least number of full-time equivalents because that's going to be your numerator in the equation. So if you had 20 full-time equivalents and you bring back 15 full-time equivalents, it's going to be, you know, your total amount of spending that you spend under the program, you know, times, you know, basically 3/4. That's the way it works. And then there's a second calculation that kicks in as far as if the payrolls have decreased more than 25% during that period compared to the first quarter of, you know, 2020. So the calculation gets kind of complicated, but unfortunately, you really have to start to look at it once you get the money, because once you go through the 8 weeks, you can't go back and change it. So you really have to start to look at, you know, full-time equivalents, how many you have, how many people it makes sense to bring back. Does it make sense? Because one thing is, if you just bring back the money and if you're bringing back people, they don't really have a job function. There's nothing for them to do. They're just sort of twiddling their thumbs. You know, then you're sort of just becoming a conduit, and it's just going to be dollars in and dollars out.
Got it. You know, to that question, there's a question on the chat. I don't recall if we're actually covering it in this presentation, so I'd like to see if we can get the answer here. If they use the 25% for non-payroll, but then they don't use all of the 75% for payroll, will they be penalized, or will they just be able to give it back? So I think we've covered this before, but we'll go ahead and answer that one.
It's going to be on the full-time equivalents. So, you know, if you spend the money on rent and you have no full-time equivalents, the way I see it, you're not going to get anything forgiven. So, you know, you could spend your 25%, but if there's no full-time equivalent, 0 divided by whatever the number is going to get you 0.
Gotcha. Okay, good. All right, next question. Where do I apply for the PPP if my bank is not offering it to its clients? Gersh, you want to answer that one?
Yeah, so that's probably going to change because the original PPP program actually ran out of funds today at 10 a.m. Now, it is going through Congress to replenish it with another $250 billion. But that, you know, that may not be for another 2-3 weeks at this point. So where you apply, if your bank isn't offering it, I don't quite know yet. That's one of the things that they're concerned about in this fourth coronavirus stimulus bill.
Got it. Joe, do you have anything to add to that?
I mean, you're really at a disadvantage if if your bank's not offering it. I mean, some people have gone up to these, I guess they call them fintech companies like Cabbage that are out there, and they're taking applications. Some community banks, in your area, if they're looking for new business, may be interested in it. But a lot of the banks, basically, they're only handling stuff for their clients. So you're at a disadvantage if your bank isn't offering it.
Okay, got it. All right. So, hey guys, thanks everyone who's providing questions for us in the chat. I just want to let you know that some of these questions are a little more personal, so we'll answer those on a one-on-one basis. If it's, for the good of the group, then we'll answer them in this particular setting. But just keep them coming because we're going to answer those for you one way or the other. All right, good. So next question. Does the 401k match contributions count as part of the calculation for the loans? Eric Garsh, you want to take that one?
Yep. Yeah, it does. That's part of your payroll costs, so it's considered.
Awesome. All right, next question. I'm getting mixed messages as to how much of a grant you can get under the EIDL, I can read, I really can, program based on qualified expenses. Also, mixed answers on how much we can borrow under the PPP. Can you clarify the limits?
Yeah, so the limit for the EIDL, it was originally a $10,000 grant, but they got flooded with way more applications than they thought they were going to. So ultimately, it ended up being $1,000 per employee up to 10 employees. And then for the PPP, essentially what it is it's 250% of your average monthly payroll cost.
Okay, good. Got it. All right, next question. Can I assign the 8-week window of the potential loan forgiveness to start at a date later than the date of the loan closing? I think we already answered this in previous, but Joe, you want to just reiterate what you said?
Yeah, it starts on your loan origination, which is the date a loan is funded. So you don't really have much choice.
Got it. Okay, good. Hey guys, I want to remind you that if you would like some one-on-one time with either your Econologics financial advisor, for those of you who are clients on this webinar event, or for those of you who are just looking into getting some help and want to talk to an Econologics specialist, we encourage you to take advantage of the offer. You can see that to the right of your screen. I just published that. So you just click on the link and let us know that you'd like to talk to us and fill out a simple little form so that we can get in touch with you and schedule some private time where we can answer all of your questions. All right, good. So I'm going to keep going here. All right. So regarding the student loan changes, if you don't make payments, does it still count toward the repayment deadline? Eric Gersh, you want to answer that one?
Yeah, this was clarified, and yes, it does count.
Oh, okay. Good.
Yep.
All righty. Next question. The SBA loan guidelines does not provide many clear answers when it comes to paying the loan back. What are the terms for the EIDL and the PPP? Joe.
Well, the EIDL, which was that originally supposed to be the $10,000 grant, they said basically that was going to turn over to a grant and didn't have to be repaid. But what was going to happen is whatever you got on that is going to reduce to your forgiveness under the PPP. The PPP loan, as far as the payback on that, originally when they were talking about a 4% interest rate with a 10-year payback, but when they finally came out with the regulations, originally they had the interest rate pegged at 0.5% with a 2-year payback. Right now, and then they changed that again. They made it a 1% loan, again with a 2-year payback. The interest is deferred for 6 months. Once the 6 months is up, you have to pay back the 6 months worth of interest. Then going monthly from that point forward, you pay interest only. Then at the end of the 2 years, it looks like, I guess, the principal payment would be due. There's no prepayment penalties. You could pay it off early. But the one thing to remember about the PPP, you're only paying back the amount that's not forgiven. So, the first thing is going to be how much of it gets turned into a loan and how much gets forgiven.
Got it. So I have a question on the chat. Can you run a short payroll near the end of your 8 weeks to utilize the funds entirely? Anybody understand that, or is that a good question?
I think maybe what he's talking about is, it's going to be your pay period during those 8 weeks.
Mm-hmm.
And do you want to try to pack as many pay periods in there, basically to try to get up closer to the 75%?
Gotcha.
And, it may make sense to do things like that, to try to do it. I mean, anything that increases your total amount of gross pay, again, not trying not to abuse the program, right? Because
right, integrity. Right.
So, but if there's a way to increase your full-time equivalence or gross payroll during that 8-week period, it's certainly going to behoove you to do that.
Okay, good. All right, next question. Will the PPP loan really be forgiven? Who wants to take that one?
I mean, according to the SBA rules, it's supposed to be. It's supposed to be. I think the one thing to keep in mind with the forgiveness is just like the loans themselves were kind of dictated by what the banks did, and the banks were all over the place. I think the forgiveness is going to be dictated by what your bank says. So I think you're going to have to work closely with your banker to try to figure out what they need to get it forgiven. What rules they're making. They have, like, once the 8 weeks are up, they have 60 days to decide. But again, I think you could get different results from different banks.
I gotcha. Okay, good. Hey, we have another good question on the chat. How do you handle associates who are 1099 and who can apply for their own funding if they're on your payroll?
Well, if you can't apply for 1099 people, right? Independent contractors don't qualify, but they could apply on their own.
Gotcha.
They're filing a Schedule C. I think they just came out with the rules on filing for a Schedule C. They're able to apply now. They may have their own LLC. They may file their own partnership return, but they would be able to file. I mean, those people were at somewhat of a disadvantage. The independent contractors, they didn't even start taking those applications until April 10th, and I think a lot of the banks were confused on how to deal with partners in a partnership and independent contractors. We even saw it with us. We're a partnership with employees. So there's 3 partners. So we have, partnership distributions and we have employees.
Mm-hmm.
My application got rejected twice because they didn't understand how to handle partnerships and they didn't know where where does that come from? So I had to actually send them the SBA rules, and hopefully they got it in, but I don't think they got it in time.
Okay, well, thanks for that answer. Okay, next question. Are there tax benefits under the CARES Act? And if so, when do they apply? Joe?
Yeah, well, there's lots of additional tax benefits. Again, there's the employee retention tax credit. So somebody that doesn't get a PPP loan could apply for that, which is 50% of your payroll up to $10,000. There's the deferral of the employer's share of the FICA tax, which again, if you don't get a PPP loan, you could defer that for the rest of the year, and then you have to pay it back over the next 2 years. They did some other things, some technical corrections to the 2017 Tax Reform Act, where there was an error in that law as far as getting bonus depreciation for leasehold improvements. They fixed that, so you could even go back and, if you were precluded because of that, you could go back and amend those prior year returns to get that bonus depreciation that you may have missed out on. They've modified some of the net operating loss carryback rules. So if you have net operating losses in 19 or 20, you'll be able to carry them back for 5 years. They relaxed some of the interest limitations and net operating loss limitations. So they did a lot of stuff to try to help people that are, have losses or certain type of limitations that would have applied in the past have sort of been lifted.
Did they change the charitable deduction too?
They've taken the 50% limitation off. I'm not sure if that applies just to cash or if it applies to cash to appreciated property also. And then on C Corps had a 10% limitation on charitable contributions. I mean, most of your clients probably aren't C Corps, or probably none of them are. They raised that to 25%. So they did increase. And they also came out with a above the line deduction of $300 for charitable deductions. Not that that's worth that much.
Okay, good. Next question. How does the EIDL advance come out of the PPP loan? Is it forgiven or not?
It's it's supposed to reduce your forgiveness under the PPP loan. So if you got a $10,000 advance and your forgiveness, the amount of forgiveness was, 100,000, they'd only forgive 90 then at that point, because you already got that 10 as a grant. So that's the way that's supposed to work.
Easy answer. Good. All right. I think we just kind of covered this in an earlier question, but we'll just cover it again. Will payroll during the 8-week period be subject to FICA tax? Joe?
I think, any payroll during that 8-week period is going to be subject to all the payroll tax rules. There is a question about payroll and expenses during that 8-week period, more so on the deductibility, because the amount of forgiveness you get under the PPP is tax-free. So the question comes up is, will the payroll you pay to get that tax-free deduction be deductible? And I don't think we really know the answer. I mean, there's a doctrine under taxes, like, if you're generating tax-free municipal interest with borrowed funds, that interest is not deductible. And will that same doctrine apply here? So I think we're going to have to get more guidance on that, but it's just something to watch out for.
Okay, good. All right, next question. During the 8-week period, if I still produce 50% of usual income during business plus use the PPP loan for payroll expenses, am I allowed to keep the income from the gain in my business? Gersh, you want to answer that one?
Yeah, absolutely. I mean, it's money that you produced. It's money that you made. It's money for you to keep. Really, all the PPP is doing is taking payroll off your back for about 8 weeks. But any money you make, that's yours to keep.
Awesome. All right, next question. I received a nice stimulus check as a Medicare provider through HHS. How do I code that in QuickBooks? Is this a payment or a loan? And will I be taxed on this payment as income? I think we kind of touched on this, but just can you answer that question real quick, Joe?
Yeah, it's not income. It's a payment. So it's not a loan. And they say it's a grant, that it's not taxable. And again, you just want to make sure that, your accountant realizes that, and that it's separated and not mixed in with your, other receipts or
ordinary income. Yeah. Got it. Okay, good. All right. My staff are currently claiming unemployment due to reduced hours. Can they continue to claim unemployment while I'm using the PPP to pay them for the hours they're working in the office? At what point must I increase their hours in order to be 100% forgiven for the payroll under the PPP loan? Joe?
Well, if they're collecting unemployment for reduced hours and, based on whatever state they're in, as long as their hours are still reduced, they'd still be able to collect on that. Now, once they get up to being full-time, then they're no longer going to be able to collect unemployment. At what point do you have to increase their hours in order to get 100% of forgiveness? Again, it's really that full-time equivalent calculation. Mm-hmm. And right now, a full-time equivalent, I think, is going to be based on 30 hours. Again, it's not defined in the law. So we're going to need to get more guidance on that, but it's really full-time equivalents.
And isn't every state different with unemployment?
Every state's different on unemployment as far as how, what percentage of reduced hours entitle you to collect. Like a lot of states, if on your reduced hours, you're getting more than their benefit, you're not going to get an additional unemployment benefit. So I think in New York, the unemployment the max is like 504. So if your reduced hours, you're making more than 504, you're not going to get anything, even though you have reduced hours, because you're earning more than their benefit. So
got it.
You got to look at it from state to state.
Okay, good. All right, next question. Can employers stop paying simple IRA contributions short term in an effort to save money? Eric Gersh, you want to take that one?
Yeah. No, you cannot. That would violate the plan. So you got to keep paying simple contributions. No ifs, ands, or buts.
Okay, good. Miller, do you have anything to add to that?
Nope, that was a good answer.
Okay. Okay, next question. As we're ramping up our practice after our PPP funds are exhausted, how do we handle paying salaries if we're not at max capacity and production is still low? Mr. Miller.
Yeah, well, this goes to the point of what you're doing right now, because there is going to be a point in time when everybody gets back to work. So you need to be promoting and you need to be producing right now, because this isn't going to last forever and the PPP funds are not going to last forever. So I get the question, but this is something that you can prevent by making sure that you start producing right now and get your books filled, so that when everybody comes back, you have a full lit of patients.
Awesome. So I want to remind everybody on the webinar that we are taking questions through chat. Right now, the current topic that we're covering is how to plan for financial recovery. We already covered government relief programs, but if you do have a question on that, and it's something that's beneficial for the group, we'll call that out. But just be thinking about questions you might have on planning for recovery. All right, next question. My building is in need of repair. Is it possible to get a loan for that in this financial climate? Mr. Miller.
Yeah, I mean, absolutely. I mean, right now, if you have cash, you're really able to spin some pretty good deals, because look, they need business. So if you need any repairs, if you need any services, if you need anything that's gonna that I would look at as an investment that is gonna help increase the value of your business long term, it's probably a good idea if you have cash to be able to try to strike a deal right now. I mean, banks are still lending. If you have good credit, you can certainly get a loan, even in this financial climate that we're in right now.
Okay.
One thing too is, again, with the full-time equivalents, if you need certain work done, it may be advisable to hire people, even if it's during that 8-week period, to do those repairs or stuff you need as an employee, if it's going to offer a benefit to your business. If you were thinking of remodeling something, if you hire that person, again, they're another full-time equivalent, and it's payroll.
Got it. Good. So there's a question. I'm not sure that we're going to have the answer to this, but I'm going to throw it out there just to see if any one of you have this. The question is, how do you suggest to pay for OSHA changes, like required under the new environments, like talk of negative pressure rooms, new filtration system? Costs like that could be overwhelming. What do you think might be on the horizon for that? Tough one, isn't it? I know.
Hey.
I was hoping maybe.
Stumped us.
I did it. So look, I think this is where you go to your association, and these are some questions that we aren't the only experts in the world, although we might claim we are, but but your associations are great resources, and other professionals that are dealing with the same issues that you're dealing with in terms of updates to the protocols in your practice. So that was a suggestion and something that another practice owner had told me that they did and had some success getting some information from their association. Okay, good. Next question. Oh, here we are again. So look, for those of you who just joined us, there is an offer to the right of your screen. You simply click the link and you can connect with us one-on-one. So it just allows you the opportunity to request some time so that we can answer your questions one-on-one in a private conversation. Whether you're a client of ours or not, we're happy to help you in any way that we possibly can. And if we don't have the answer, we will certainly point you into the direction of someone who does. All right, so let's keep going. All right, we're still in planning for financial recovery. So the question is, after June 30th, if I'm fully staffed, is there a requirement to continue that staffing level for the forgiveness rules? Who wants to take that one? Miller?
I believe the answer is no. After June 30th, you're free to hire and fire as you will. So it just covers that period of time. So that's the short answer on that one.
Okay, good. All right. Now we're going to go on to another topic of handling of debts during this time. So we have a few questions here regarding handling your debts. So the first one is, what debts do you recommend we not pay at this time, i.e. mortgages, rents, credit cards, etc.? Mr. Miller.
Well, I think at this point in time, everyone should have gotten in communication with their landlords, with their creditors, with anyone that you have that you owe debts to, and either tried to defer it or spin some kind of a deal with them in terms of trying to preserve your cash flow. Right now, whatever you can do to preserve your cash flow is paramount. So you have your accounts receivable, you have what's in your business checking accounts, you have what's in your credit lines at this point. So I would try to preserve that right now, because again, We don't know how long this is going to last. I know that there's talk about the recovery. I think it's probably going to be done in stages. So you really don't know what your patient load is going to be, especially as we come back. So I would really try to push some of this stuff as far as you can, and make sure that you get in communication, with these people, because if you don't, they're just going to assume you're going to make their payments. Mm-hmm. So you really should make sure that you address them.
Okay.
Yeah.
Perfect.
I want to add on that there's,
sure.
Yeah. There has not been any widespread regulation on privately held debt. So kind of like Eric Miller just said, it is on a case by case and lender by lender basis.
So the short answer again, get in touch with your whoever you owe and see what you can work out. Got it. Okay, good. All right. So next question here is more of a general financial planning question. Where should our remaining funds be? So banks, mutual funds, money market accounts, brokerage accounts. Mr. Miller.
Yeah. Well, look, I think it's on an individual basis, of course, but we've talked a lot about making sure that, if you have so much that you can keep in one bank, it may be a good idea to spread that out to other banks, just so that you can still maintain the FDIC insurance. Each of these institutions has certain risks to them. And depending upon the financial environment that we're in, you could have a risk associated with that. So, it's a case by case basis. Joe, I know we were talking about that earlier, as far as if you're going to have money in money markets and such, you should probably have those that are backed by treasuries. I thought that was a pretty good point. Yeah.
Nope, that's good. Awesome. All right. Since my income is taking a bit of a big hit, how will cutting back on monthly payments to contributions to my investment or insurance policies affect my benefits in those accounts? Mr. Miller?
So is this particular to the life insurance policies?
Yeah.
Yeah. Okay. So really, if you have, let's say, for instance, you have a life insurance policy that you have been maximum funding for a period of time. So the reason why those are beneficial is because they have a minimum or a maximum that you can put in there. And even when there are times where you can't maximum fund it, that doesn't have a negative impact on the overall performance of the policy. You can minimize that down for now to preserve cash flow that you have, and then you can always go back and max fund those policies and put whatever the limit would have been. So that's why we kind of set it up that way, so that there is some flexibility there and you're not stuck with the payment that you have to have. So, but long term, as long as you get back to max funding it, there really should not be any negative benefit to you for doing that.
Yeah, and it matters the term of time that you've been doing it too, right?
Yes.
Okay, good. All right. Next question. How does one go about getting an accountant who is familiar with the business of chiropractic? So this is a very specific question.
I think we should let Joe answer that question right there.
Joe, answer that question, please.
Well, we have dozens of clients that are professional practices, chiropractors, veterinarians, dentists, physical therapists. So, we're available to help anybody that is looking for an accountant or needs help. So again, we'd be glad to help anybody out that was looking.
And I'll give him a plug too. He's been our accountant for God knows how many years, 6 years. And I have never heard one person have a negative feedback at all in working with him. Not one. That's kind of crazy.
Yeah, me neither.
Yep, me either. We referred a lot of our clients to Joe's group, and everyone has been just head over heels in love with the service, because I think that's the trick, right? Is getting good service and good communication. And I think that Joe's group does that. So look, if you guys are looking for an accountant, we are happy to introduce you to Joseph Rosamilia. Please click the offer, or you can directly let us know that you'd like to get in touch with him. Although we have him on this webinar, answer a lot of questions for everyone who submitted in advance, and those of you who are on chat, he's not just available to answer one-off questions. So we want to filter all those questions through our firm, and then we'll probably already have a lot of these answers so that we can give those to you. And if we don't, then we can go to Joe and ask a few questions that randomly come up that we don't have, to hand. But if you are looking for an accountant, we're happy to make that introduction for you. And we highly recommend his group. Okay, so I'll keep moving. All right. You usually recommend pay yourself first. Where does that stand now, Mr. Miller?
Okay, well, to me, it's more important now than ever. Look, if you didn't have 2 or 3 months of business reserve sitting in an account, that was a problem, right? And I think we all seen right now what the lack of liquidity for a lot of practice owners, the effects that could have on your psyche, on your business. So you have to be realistic right now. I know a lot of us have probably had to take pay cuts. I know a lot of us have had to do what we've had to do to keep the business there. But we have the opportunity right now to reset this thing. So you have to start planning ahead and looking forward and saying, okay, after we start getting our patient visits back to where they have been before, I really have to be a much better money manager than I have been, meaning that I have to make sure that I have business reserves, that I am putting my profit in and I'm putting it front and center. Because if you don't do that, it's never going to be there. And gone are the days where you think you can run a private practice on a 10 or a 12% profit margin. That is gone. Forget about that. I mean, you can do that, but you're never going to be in a position where if something like this happens again, and it will, that you're going to be sitting there like twiddling your thumb saying, oh, woe is me. How am I going to handle this again? Okay. So every one of you should have enough in reserves where you can operate your business for at least 6 months without making a penny. The only way that you're ever going to do that, is if you build that in to what your business needs to make to spend, and make sure that it does that. So there you go.
I love it. If you guys need help with that, we are happy to help you figure this out. Okay, good. Next question. All right, I bought land to build a new clinic before COVID-19. At what point do I try to move forward with this new clinic? And how do I know the economy is sound enough? Mr. Miller.
Yes. Okay. Yep, I do. Look, okay. Your environment is not dangerous to you. You are dangerous to your environment. That's the viewpoint that you have to have. And what do I mean by that? Okay. Now, look, we can all cry and say that the economy is doing this and that we're in a recession or a depression or anything like that, but that ain't going to pay the bills. That's not going to put money in your bank accounts. You have to have the viewpoint that I am in control to some degree of my outcome. And if you're in expansion mode, if you're going to do that, then do that, right? Most of you are in industries that are still going to survive and thrive, even in the midst of what we're going through right now. Mm-hmm. So just kind of have that viewpoint. Don't have the viewpoint like the economy is going to run me. You can have that viewpoint, but it's never going to lead to anything that you're going to be proud of. I've seen, I'm trying to think of a saying that I had. I mean, you can kind of blame the outside economy for your money problems, but it's generally an inside job. It's usually due to bad money management of why someone is insolvent or doesn't have profit. So expansion is the best thing that you can think of right now. Make sure that you put your attention on there. Make sure that you guys are, thinking big. And don't worry about the economy. You're all in the good industries, especially if you're veterinarians and physical therapists and dentistry. I mean, these are all things that are, recession proof to that degree, and they will thrive if you know how to run a good business. I'm fired up right now.
Woo! All right. Anybody want to add to that? All right. So I think this is the last question we have on the actual PowerPoint here. What patterns have repeated in previous economic recessions or depressions that may be gold mines this time around as well? What opportunities have the potential to double or better the ROI? Mr. Gersh, you want to start out?
Yeah, sure. So oftentimes when stuff like this happens, everybody's looking for that one investment where they're going to get rich quick. I mean, it's pretty natural as a human being. Now, with that said, there probably will be that investment out there. There's going to be some company that comes up with a cure, some biotech penny company that's going to skyrocket. But there's hundreds of them, and the odds that you pick the right one are, probably less than your odds at getting rich at a casino. So where you really have opportunity at a time like this is in other private practices around you. There's going to be local practitioners that were not prepared and go out of business or get scared out of business as a result of this. And you should be able to go and pick up another viable practice, or a practice that you can make viable on the cheap.
Yes. Stick to what you know. Oh, absolutely. Stick to what you know. If you know how to build a business and you can get, someone, that wants to retire or just can't tolerate this kind of environment, then you should be able to get a practice that is relatively inexpensive. And then you can, as it comes out of this recession, you should be able to expand that, and that will create a tremendous amount of value for you long term. So yeah, I think that's a great idea.
Awesome. Hey guys, we have a question on the chat. If using the EIDL funds for payroll, are we still required to use these within the 8 weeks or release of funds? Also, if the EIDL is used for payroll, can I still use PPP funds if needed for the same purpose? So I think there's just a little confusion about the two different loans there.
Well, on the EIDL, if you're talking about the $10,000 advance that people received, I don't think there's really any requirement that gets used for payroll. Again, it's going to reduce your forgiveness, and those dollars again are fungible. So I don't really see the distinction there.
So if you get both funding, use the PPP for payroll and other expenses, and maybe not touch the other one if you don't need it.
If you got the $10,000, it's just going to go into your checking account, and when you go to forgiveness under the PPP, it's going to be what you spent on payroll. They're not going to care if you use that $10,000 to spend on payroll. If that's what the question is, I don't think that matters.
Okay, good, awesome. All right. So, any other questions on chat? So everybody, throw them in right now. I'm just going to go on to the next slide and let Mr. Miller explain what it is that we do.
Yeah, I mean, for those of you that don't know what we do, I mean, we specialize in helping private practice owners really restore their financial health for their household. And, we do that. You look at all the problems that you're having right now. A lot of you don't have a lot of liquidity. A lot of you have a lot of debt that you can't handle. You're overpaying in taxes by $20,000 to $40,000. Think about the condition that you're in right now, and it probably doesn't feel very good. And the only reason that you're in that condition right now is because you didn't really prepare for it or have a plan. And, what we do is really specialize in making sure that practice owners run their household like a business, that they treat their business as an investment, and that you set up the business to channel money to the household so that it finally starts to serve you as opposed to you serving the business. So, we create a plan for you. We show you how to build reserves and create other income streams. We show you how to get out of debt in the fastest way possible and have open credit lines. We definitely don't over speculate with your investments so that, they go down 20, 30, 40%. We have guys like Joe that show you how to minimize your taxes. But most importantly, we try to be a beacon of financial sanity for you so that we hold you accountable and, make sure that we push you through the resistance that a lot of us are feeling right now. That's what we do.
Awesome. Okay, guys, so we've kind of come to the end of our webinar event. I didn't see any additional chat requests. For those of you who would like to take advantage of some time with either an Econologics specialist or your Econologics financial advisor, please click the offer to the right of your screen. For those of you who are on our YouTube channel, please look below in the description, and we'll have a form there that you can fill out so that you can contact us directly, and we'll get an appointment scheduled for you. So if there isn't anything else from anyone in chat, I don't see anything going on. Do you guys have any other comments? Any final thoughts?
No, I think that, again, people, if you've received your loan, you have some decisions to make over the next couple of weeks about, the best way to utilize that and how to plan that out. So you should like I said, probably sit down with your accountant and start to plan that out, because once you're done with that 8-week period, you're not going to be able to really go back and change that. So it's just, if you got the loan, lucky enough to get it, and it's been funded, start to plan how to use it.
Yeah.
Okay, good. Hey, we did get, go ahead, Eric.
I had one more thing to say. I was just thinking about this. Right now, everybody, I'm getting a lot of clients that are tending to ask questions about like, oh my gosh, what's it going to be like in July and August? What does the recovery look like? At a time like this, just try to keep it simple and mainly, not completely, but mainly focus on the next 2 weeks, because everything past that is just guessing.
Yeah, good advice. Okay, guys, we have 2 questions that are repeated that really want to get answered. So the first one is how to quantify income for PPP if you're filing a Schedule E for single member LLCs. Joe?
A Schedule E would be a rental property. So if you have a rental property, I don't see how you'd qualify for a PPP loan based on rental property. It really hasn't been anything that's been real estate related. Again, that would be different than, if you were Schedule C, which would be self-employment income, but rental income isn't self-employment income. And the only way would be if on that Schedule E, it was a big enough piece of rental property that you had employees. Under that Schedule E, you could probably get a PPP loan based on those employees, but typically rental income isn't self-employment income. So that income itself wouldn't qualify.
Okay, good. And then we have another question here. Let me find it from one of our clients, actually. Is it possible to advance payment to my employees if the PPP funds are deposited into my account before the office opens back up? So she's down in the Keys, so everything's closed, just so you know.
You could, your employees don't actually have to be working to pay them, with the PPP funds. So as long as you get, you'd have to get it on payroll. You'd have to, get it through your payroll service, however you do your payroll. But your office doesn't have to be open. That was the idea behind this, that the money would come in to pay people whether or not they were working or not, so they wouldn't be on unemployment.
Okay, good. And then one final question for Joe. What do you look for in a good CPA?
I guess the biggest thing is somebody that's responsive. You want to know that if you call and you have a question, he's going to be able to help you with it. And that's the biggest effect. I mean, everybody's concerned about paying taxes or paying the least amount of taxes possible. And, I think we all work towards that goal. But I mean, you want somebody that's just going to, be there to answer the phone and to help you when you need it. And that's what we've tried to do with our clients through this, is the people that needed help with their applications or, trying to understand this stuff, just to sort of, be there for them, even, 7 days a week till this gets old.
I'll add to that, one of the things that we would recommend is that you're looking for an accountant who specializes and understands your practice. So much like, we would recommend for a financial advisor and hiring someone that understands your practice, that's your largest investment asset. It's even more important for an accountant, because that is obviously, one of the most important pieces and areas where we see a lot of lost income is just understanding you as a practice owner and what's available to you. So any additions to that, Mr. Miller or Gersh?
Nope, I think it was great.
Okay, guys. Well, we are done for the day. We did it in under an hour. Woohoo! And so we're still taking questions. Please don't hesitate to let us know what you need and what information you need, and we will get that information for you come hell or high water. All right. Thanks, everyone, for joining us, and we look forward to seeing you on the next webinar event. Take care.